Let's bring in our next guest, Thomas Caulfield, CEO of GlobalFoundries. He joins me right here at the Reagan National Defense Forum. It's great to have you on.
Thanks for having me.
So I do want to start right there with this notion of the semi market becoming this lightning rod for geopolitical tensions. It draws into the focus the fact that you have this accreditation as a trusted foundry. What does that enable, especially in this world where you do see more of these tensions?
Well, let's first talk about the role of semiconductors and then our role in that.
Okay.
I think what you're seeing is the confluence of how important semiconductors are to economic security, supply chain security, and national security. I think they've always been there, but the geopolitical temperature has raised the concern of that. But, independent of geopolitical, any business that runs always thinks about single points of failure. And having a high concentration of such a critical capability in one country in the world, independent of geopolitical, it could be geological reasons. Having that level of concentration, single point of failure is not good. It's about supply chain resiliency is important. Now that builds into, we need to make it resilient, and which means broadening out that supply base, but also the provenance, understanding and knowing where that technology is made so you can trust it. And that's where I think GlobalFoundries really comes into the forefront. We operate on 3 continents: Singapore, U.S., and Germany. In the U.S., we're a trusted foundry, so we're charged and honored to deliver the most important and sensitive semiconductors for the U.S. military. In Singapore, our customers trust us to not only convert their designs to great products, but also to do it in a very trusted way, protecting their IP and ensuring that we have the trust to deliver to their technologies, and similar in Germany. So I think that's how that all comes together.
And so what does that mean in terms of demand for using your manufacturing capability for the types of chips that you can make more broadly?
So I think what's happening now is the recognition of resiliency. You'll first see is a bunch of other semiconductor companies that we compete with are looking to expand their global footprint because it's becoming important. When we were born as the world's first global footprint for manufacturing, the world didn't care as much as they do now. So the first thing you'll see is other companies are going to spend the better part of the next decade creating what we already have. We're seeing companies around the world wanting to build some of that resiliency in and coming to GF to offset some of the concentration they have. But this is not something that happens overnight. It took 3 decades to create this dynamic we have today, this concentration. It's going to take decades to get it rebalanced. And our job at GF is to make sure we position the company to take that opportunity and deliver to our customers and leverage what we spent a lot of money to create.
Hey, Tom. It's John Fort. Good to see you. I'm wondering about demand. We got the warning from Jabil this week on lower demand. I imagine that hits communications infrastructure where you have customers, but also consumer spending this week has been surprisingly strong, which could boost some things in lower-end electronics. How do you expect it to balance out?
I think the view we have is because we play in so many end markets, we could see the different dynamics playing out. I think so for us, let's start with anything that's consumer-led. It was good to see, Black Friday and Cyber Monday deliver $10+ billion worth of commerce. That's great. But is it going to sustain every day leading up to the holidays, or is everybody done? Consumer spending, is it going to recover in China? That's a big market, so we need that market to come. Automotive still looks strong. It's a supply chain that is finally getting caught up with demand and supply, and it looks strong going into 2024. I think you're right. Infrastructure and communication infrastructure is still a story to be written. It's still on the low end of things. And I think one of the few bright spots is in AI-driven data centers, and I think that demand will continue to stay strong well into 2024. So that's kind of how I handicap our industry. I think for all of us, it's too early to call 2024. There's, I think, a wide range of outcomes, but I think you need to look for is inflation coming under control, so interest rates to come back down and give consumers the confidence and the wherewithal to get spending on goods again, and that will only happen when they have more confidence in their disposable income and their financial position.